Our 3-day analysis met our expectations, and it's time to evaluate the incoming signals. We are in the midst of some turbulent times, and it's important for us to identify where we are in the charts. So let's pop open the price to gain an edge over the coming sessions ahead. Welcome back to the channel on this Hump Day Wednesday. This is ARCa, and let's dive into AMC. Let's kill them, team. What is up, you guys, and welcome back to the channel. Please do me a favor, hit that like button, subscribe to the channel, do everything necessary to get this thing to live long, thrive, and survive. Let's go ahead and take a look at AMC here, team. And this is the 3-day time frame that we were observing just a couple days ago, where we were talking about the potential closure of this candle leading towards a 3 rising methods formation that can lead towards a downside in price, right? We were identifying a low of about, just in case, right, a low of about $4.10, of which we reached a $4.17 so far. Okay, you guys, so please be very careful over these next coming days, because there is or can be continued pressure towards that downside. So what we're going to do here is identify if this downside is now officially over, since we got this really nice pump from 417 all the way to 424, right? So let's go ahead and pop open here the immediate short-term time frames to identify that strength. Okay, we're going to use linear volatility represented by this indicator here, ABTVHM, which is the volatility heat map, and we're going to use this or verse it against stochastic momentum, right? This is a free indicator, right? It's you can just type in StochMo inside of TradingView, and you'll be able to find the indicator. I did color it a little differently, right? So just know that it's still visible for you. Okay, so the immediate short-term time frame, nice pop in the upside, expecting a little bit of downside here. The hourly time frame is expecting a little bit of downside, seeing that kink in price action, and also seeing that the price ended up printing a bearish engulfing at the top of this trend here. Okay, so there is a little bit of pressure towards the downside. We're going to find out how much pressure to that downside there could be. Okay, bi-hourly time frame did close it looks like a pretty nice red outside bar there, right? Not quite a bearish engulfing, but still long wicks towards the upside equals weakness towards that direction, towards the upside, right? So in this case, there may be continuation to the downside here, even considering the bi-hourly time frame, since the bi-hourly closed and it still has not seen the price action of this, right? So as soon as we get the next candle printed or the next candle to open, that's when we're going to see what the effects of this candle did to the stochastic momentum indicator, right? So 3-hour time frame here, also closing pretty red here, possibly kinking that stochastic momentum indicator even still, and getting some volatility increase. So yes, guys, I do expect there to be some downside coming in, and it's cascading towards the 4-hour time frame. Okay, so now 4-hour time frame downside with a little bit of expansion, right? So we're going to use linear volatility here, representing the dispersion of returns. We're going to use linear volatility to determine how much throttle or how much gas there is being applied to the direction of stochastic momentum, right? So right now you can see that we're headed downwards, and with expansion, upside volatility, that would be the throttle, that would be the gas pedal, right? So we're going to go ahead and gas the pedal towards a downside. That's generally how we can observe volatility. Now you can see here that the 6-hour time frame did close another red bar, and it's already testing that inflection zone at around that 423, 424. We spoke about this just a couple days ago. Okay, team. So let's go ahead and now find out where it's going to end, right? Okay, so the 8-hour time frame has a little bit of curvature here that it feels like it may be the end of that. 12-hour time frame, a little bit downside, and the daily time frame, a little bit on that downside too. Okay, guys. So I think that the next day here on AMC could, with higher probability, be a red day. And there is going to be a little bit of a pop towards that upside, and we're going to identify where that is, right? So yeah, immediate short-term time frame, 5 minutes to 10-minute potential retrace here, which is only telling me that we may be able to test a post-market high to around the prior day's high, being today's high around 432. I don't know that we can get all the way up there, but I'm going to go ahead. And kind of mark off price action here, or the resistance levels, just so that we are aware over where price can resist into the coming session, right? We are getting expansion here. We are getting a little bit of a corrective move here on the 10-minute time frame, a little bit of a kink right there, suggesting a potential corrective move to validate resistances. Okay, guys, that can tell us that there will be, or that there can be continuation to that downside. Okay, guys, this downside here is apparently going to start here a little fast. So if we have days worth of downside here, if we have a day's worth of downside, then let's go ahead and see how much that would be. So it looks like we're expanding to the downside here about close to 16 cents. So 16 cents, I guess, minus 10 cents, that would put us at 414, right? Minus 6 cents, that would put us right into this area here. Even still, mathematically speaking, we are still on for the targets that we were talking about 2 days ago, right? So the day before yesterday. So please remember to mark off. I'm going to leave the receipts in here, right? Just in case we get price action in here. I will say that if price action reaches the 403 level, there is a pretty significant bottom side here, right? So that price was responsible. This candle here was responsible for a jump from 403 all the way to about $4.42, which we just faced, right? So it would be a nice area here to catch a relief bounce for price and potentially start testing again that 424. So nice volatility coming in here, but I will say some of that volatility is leading towards a downside bias. Okay, you guys, so please be very careful. Now, know, guys, that we are observing price action here in the ARCa Bulls trading team. So I want you to join. Make sure to hit those links on the side, on the left, and guys, come by. We are playing the markets every single day. There are opportunities here that many of my traders are taking advantage of. Okay, so come on by and we'll see what's up. Also, guys, if you still want to be a part of the Beginner's Master Course, right? This is going to be the ultimate master's course to understand charting here and trading for beginners, literally for beginners. Get in touch with me, ArcMastersCourse at Gmail. It's not too late. We're just beginning. Okay, team, thank you so much. And let's go ahead and now evaluate the continuation of price action. So yes, I am expecting a continuation to this downside here. But what I will say is this. Remember, I just gave you the resistance level of this point here. So we're just going to mark off those receipts anyway, right? So this 428 to about 432 is what we're expecting here as some type of resistance. But there is something critical that happened today. Today, we got the 5-day close. Now, the 5-day close did close a pretty bearish candle. Okay, so this bearish candle is giving us the probabilities of retracing based on this shooting star, right? So shooting stars at the top of a formation usually lead towards a continuation to the downside. Okay, now, if that is the case, then there is a potential 50% prior bar retrace, which is going to be this one here. Now, the next one's going to print, so this would be our prior bar, right? 60 to 70% of the time, we get a 30 to 50% prior bar retrace. So the 50% on this would be located right at around $4.30, right? Very interesting, since we are getting the discretionary 15-minute time frame, or actually the daily ATR of 16 cents. That's giving us a potential retrace to 428 to 432, and having the right in the split, right in the middle of that box is $4.30, which just so happens to be the 5-day gap that we created here, and also the confluence of the 50% of this future prior bar retrace, which is going to be the prior bar effectively tomorrow. Okay, guys, so that kind of confluence here is what traders use for higher probability plays. Okay, guys, so just know for a fact that I am expecting a potential retrace here. It could happen in the pre-market. It could happen in the early pre-market or at Euro Open, 1 a.m. Pacific time, 4 a.m. Eastern time, right? So please be careful, as that's about to happen here. So if there is a chance to risk off or risk on betting the downside, then that would be it here. No, guys, that I am not risk on this asset whatsoever. Okay, guys, not at all. I'm just giving you the targets here. I'm giving you what I expect. I'm going to go ahead and draw it in here just like I do for every single market prep, right? Make sure to come on by, because we're prepping every play just like this, right? So we got an upside here, and then we got a continuation towards the downside here. Just a little bit of support here, followed by a resistance right at about this point before that continuation to the downside, okay? Now, I'm going to say, guys, please join the ARCa Bulls trading team so we can learn some stuff together, okay? I love you guys so much. This is a pretty good place to leave off, and we'll talk very, very soon, okay, team? Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever, ever. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well, a very, very good rest of your night and or day, and I will catch you at the bell mañana. Adios, team.